Bitcoin's price action has been a wild ride, with dramatic swings that have left traders and investors on edge. In a matter of hours, Bitcoin briefly plunged below the $90,000 mark, sending shockwaves through the market and sparking a flurry of activity among both seasoned professionals and retail traders alike. But just as quickly as it fell, Bitcoin managed to bounce back, recovering to hover near $91,000. This rapid rebound highlights the intense volatility that has become a hallmark of the cryptocurrency market, where fortunes can change in minutes and every price move is closely watched. Such volatility isn't new for Bitcoin, but the underlying reasons are more complex than ever. Much of the recent turbulence is closely tied to the broader economic landscape, especially the U.S. Federal Reserve's policy signals, which have become a major driver of sentiment not just in traditional markets, but in crypto as well. Investors are now hyper-focused on every word from the Fed, parsing statements and economic data for clues about interest rates and future monetary policy. Bitcoin's price, once seen as independent from traditional finance, now reacts sharply to these cues, reflecting its growing integration with the global financial system. As of November 19, 2025, Bitcoin sits at about 99.53, a modest 1.4% daily gain that belies the recent drama. While the number may seem stable, it masks the underlying tension and rapid shifts that have defined the past 24 hours. The quick rebound after hitting a 7-month low shows that buyers are ready to step in at a moment's notice, highlighting the ongoing tug-of-war between bearish fears and bullish optimism. This dynamic creates a market environment where sentiment can shift rapidly, and both risk and opportunity are ever present. In this video, we'll break down the key forces behind Bitcoin's recent swings, helping you understand not just what happened, but why it matters for the future of crypto. We'll look at how Fed policy decisions, a delayed jobs report that added uncertainty to the market, speculation over who will be the next Fed chair, and what that could mean for interest rates, and a major funding round for Kraken, one of the world's leading crypto exchanges, are all shaping the current landscape. We'll also take a closer look at how other cryptocurrencies are faring in this volatile environment, as altcoins and tokens experience their own wild price swings in response to the same macroeconomic forces. So, let's dive in and explore what's really driving the crypto market right now and what you need to know to navigate these turbulent times. Bitcoin's dip below $90,000 wasn't random. It was triggered by growing caution in financial markets. That level is a psychological barrier. Breaking it can spark panic selling and automated trades. The main culprit? Shifting expectations about the Fed's interest rate policy, with recent hawkish comments dashing hopes for imminent cuts. This risk-off mood pushed investors toward safer assets, but Bitcoin's quick rebound shows strong buying interest at lower prices. Long-term holders, hodlers, see these dips as buying opportunities, providing crucial support. The battle between bearish macro fears and bullish conviction is fueling the volatility. The failed push toward $94,000 signals that Fed-driven bearishness still dominates. Ultimately, Bitcoin's value remains tightly linked to the broader economic climate and investor psychology. The Federal Reserve's interest rate decisions ripple through every market, including crypto. High rates make borrowing expensive and safe assets more attractive, drawing money away from riskier bets like Bitcoin. Bitcoin, which doesn't pay interest, struggles when investors can get solid returns from bonds or savings accounts. Conversely, low rates push investors toward higher growth, riskier assets, fueling crypto rallies. The recent uncertainty stems from the Fed's aggressive rate hikes and unclear signals about what's next. Will they cut rates to support a slowing economy, or keep them high to fight inflation? This ambiguity is driving Bitcoin's choppy price action. Until the Fed's path is clear, expect more volatility. Crypto's fate is now closely tied to central bank policy. Fed officials are sounding increasingly hawkish, prioritizing inflation control over rate cuts. Their cautious tone has dashed hopes for quick monetary easing, unsettling risk assets like Bitcoin. Mixed signals and data dependence from policymakers create uncertainty, which translates into volatility. Traders react quickly, selling on hawkish remarks, buying on any hint of dovishness. Bitcoin's recent dip below $90,000 was fueled by this nervousness. The market is waiting for a clear green light from the Fed, but for now, it's stuck on yellow. Until the Fed signals a shift, crypto will remain highly sensitive to every word from policymakers. Short-term stability is unlikely in this environment. The delayed U.S. jobs report is adding to market anxiety, as it's a key indicator for the Fed's next move. Investors, analysts, and policymakers alike are all waiting for this crucial data, which often sets the tone for financial markets and influences decisions across the board. Without timely information, uncertainty grows, and speculation fills the void, making it even harder to predict what comes next. A strong report could mean the Fed keeps rates high, pressuring Bitcoin. A weak report could open the door to cuts, boosting crypto. The stakes are high, as every data point can shift expectations for inflation, interest rates, and the broader economy. For Bitcoin and other risk assets, the direction of Fed policy is especially important, as it shapes the flow of money into or out of these markets. This month's delay, caused by a government shutdown, has left investors and the Fed in the dark longer than usual. The shutdown not only disrupted the release of economic data, but also heightened the sense of unpredictability in the markets. With fewer signals to guide them, traders are left to interpret rumors and partial information, increasing the risk of sudden market moves. The upcoming release is unusually significant and could break the current market deadlock. Many are hoping that the new data will provide clarity, helping to resolve the standoff between bulls and bears. The anticipation is building, with financial news outlets and market participants counting down the hours. Bitcoin's slight recovery hints that some are betting on a weak report, but caution prevails. Traders are hedging their bets, unwilling to commit fully until the numbers are out. This cautious optimism is reflected in modest price movements, as everyone waits for confirmation before making bigger moves. The entire market is in a holding pattern, waiting for this data. Trading volumes are lower than usual, and volatility has dropped as participants sit on the sidelines. It's a rare moment of collective pause, with both traditional and crypto markets showing restraint. The jobs report will likely set the tone for Bitcoin and other assets in the coming weeks. Whether it signals strength or weakness, its impact will ripple through stocks, bonds, and cryptocurrencies alike, shaping strategies and sentiment for days to come. Until then, expect choppy, indecisive trading. Markets may swing on headlines and rumors, but real conviction will be hard to find until the official numbers are released. All eyes are on Thursday's numbers, as the world waits for the data that could finally break the stalemate and set the next direction for global markets. Speculation over the next Fed chair is adding another layer of uncertainty. President Trump's hints about a new appointment have sparked investor unease, as the Fed chair wields enormous influence over global markets. Markets crave stability and independence from political pressure. Any threat to that can rattle confidence. A politically motivated chair could push for lower rates before an election, risking inflation and long-term instability. This leadership question is fueling risk-off sentiment and keeping investors cautious. Until an official announcement is made, this uncertainty will linger. For Bitcoin, it's another variable to watch, one that could swing sentiment quickly. The drama in Washington is echoing across the crypto world. Amid the macro gloom, Kraken's $800 million funding round is a major bullish signal for crypto. The new valuation, $20 billion, shows strong institutional confidence, with backing from Wall Street giants like Jane Street and Citadel Securities. This isn't just about one company. It's a sign that big players see long-term value in digital assets, even during volatility. Kraken plans to expand regulated on-chain financial products, blurring the lines between traditional and decentralized finance. Institutional capital is legitimizing the crypto ecosystem and building its foundation for future growth. While Bitcoin's price may swing with Fed news, Wall Street's bets are on the industry's long-term potential. For everyday investors, this is a reminder that the crypto market's core is getting stronger. The smart money is here to stay. Bitcoin's moves set the tone for the entire crypto market, and recent volatility has kept altcoins in check. Ethereum, XRP, and Cardano have mostly traded sideways, reflecting the cautious mood. Some, like Solana and Polygon, managed small gains, showing selective investor interest in strong projects. Even meme tokens like Dogecoin saw slight upticks, but the overall market is consolidating. Altcoins remain tethered to Bitcoin and macroeconomic signals. Until Bitcoin breaks decisively, most altcoins will stay range-bound. The jobs report and Fed signals will determine if altcoins can break out. For now, the market is in wait-and-see mode. Bitcoin's recent roller coaster ride is a powerful reminder of just how closely the world of cryptocurrency is intertwined with global economic forces and the decisions made by central banks. Every sharp move in the market reflects not just digital asset sentiment, but also the broader anxieties and hopes of investors reacting to shifting economic tides. Hawkish commentary from the Federal Reserve acts as a strong headwind, often dampening enthusiasm and causing price swings. Yet, even in the face of uncertainty, major institutional investments, like Kraken's recent funding round, signal a deep and growing confidence in the long-term potential of crypto. These moves by big players suggest that, beneath the surface volatility, there's a belief in the future of digital assets. Other cryptocurrencies are navigating these same turbulent waters. They're being suppressed by macroeconomic fears and regulatory uncertainty, but at the same time, they're buoyed by relentless innovation, new use cases, and increasing adoption across industries. The push and pull between fear and progress is shaping the entire crypto ecosystem. The market is clearly divided. On one side, anxious investors keep a close eye on every word from the Fed, worried about interest rates and inflation. On the other, developers and entrepreneurs are heads down, building the next generation of financial technology, undeterred by short-term volatility. This ongoing tension between caution and optimism is what fuels the volatility we see today. As both narratives compete for dominance, price swings and sudden shifts are likely to remain a defining feature of the market. The next big moves in crypto will hinge on key economic data. A weak jobs report could trigger a relief rally, while persistent inflation or unexpected political drama might keep markets on edge, amplifying uncertainty and risk. For anyone navigating this landscape, understanding these powerful drivers, macroeconomic trends, policy shifts, and technological innovation is absolutely crucial. Staying informed can make all the difference. Informed investors are able to look past the daily noise and focus on the bigger picture, identifying the trends and opportunities that are truly shaping this transformative technology. In times of uncertainty, knowledge and perspective are your best tools for navigating the crypto waters.